Hello everyone and welcome back to the channel. Today, I'm gonna talk about an industry that has the potential to make millions in the next few years. This industry is very innovative and comes with a bit of more demonstrated potential than any other industry. It is none other than the electric and autonomous vehicle industry. Electric car stocks are those of companies that focus primarily on manufacturing electric vehicles. In addition, company that manufactures the components used in electric vehicles, like batteries or autonomous vehicle systems, can also be considered as a part of this industry. There is a lot of investment opportunity in this space, but I've picked 3 diversified potential investment ideas in this industry that look favorable. But before we proceed to the video, please don't forget to subscribe to my channel and like the video. The first potential investment in this industry would be Ford Motor Company. With the new CEO Jim Farley leading the way since October, Ford's focus is on becoming a leaner and more efficient company with a stronger supply chain that can be a leader in the electric vehicle revolution. This plan includes developing more zero-emission capable vehicles and a target for 40% of global sales to come from electric vehicles by 2030. It also aims for all the passenger vehicles it sells in Europe to be fully electric by that year. Revenue in the first quarter rose by 6%, while warranty expenses fell by $400 million. The revenue jump was driven by a shift towards higher margin vehicles and improved pricing, generating transaction prices of $1,900 higher per unit than the industry average. So far, investors are showing their belief in what some might call a turnaround for Ford. Ford's stock hasn't touched $18 in over a decade. Shares are already up by 74% year to date and up 126% since Farley took over. In the past 6 months, the company has made available electric versions of its iconic Mustang, its F-Series trucks, and introduced the return of Bronco SUV line. It also recently revealed a new and smaller pickup, the Maverick. My next investment option in this sector would be ChargePoint. As the number of EVs rise, so will the need for charging stations. The International Energy Agency forecasts that by 2030, the number of EVs on the road worldwide will reach out to 145 million. And with increased government support for sustainability efforts, it estimates that figure could reach 230 million. ChargePoint is a leader in the EV charging space. It touts 60% of Fortune 50 companies among its 5,000 customers. The company has over 18,000 locations spread across North America and Europe, supported by an easy-to-use mobile app that displays real-time availability information for charging locations. ChargePoint is North America's leader in Level 2 charging. As of the end of its financial year 2020, ChargePoint had over 132,000 public and private places to charge in Europe and North America. For comparison, Tesla has 25,000 superchargers around the world. ChargePoint makes money mainly from commercial customers such as offices or stores that install its charging stations to attract business or provide a perk for their employees. 70% of ChargePoint's billings came from its commercial customers, while 11% came from fleet, 14% from residential, and 5% from other. It's worth understanding that ChargePoint doesn't generate revenue by selling electricity. It isn't a utility or gas station that makes money by selling fuel. Rather, ChargePoint makes money by selling charging stations and servicing those stations. And with $610 million cash balance as of the end of the year, ChargePoint looks set up nicely for the long term. The third and the last investment option in this sector would be Global X Autonomous and Electric Vehicles ETF. A lower risk approach to investing in the electric and self-driving vehicle markets would be to put your money into a larger or more diverse field of companies through an exchange-traded fund, ETF. The Global X Autonomous and Electric Vehicles ETF offers investors a concentrated focus in these areas, but doesn't restrict itself to automakers or charging station players. The exchange-traded fund mixes key tech suppliers such as Nvidia, Microsoft, Apple, and BlackBerry, and among the likes of Ford, General Motors, and Tesla, giving investors exposure to niche such as artificial intelligence for navigation and infotainment, and Internet of Things data analysis. Currently, information technology stocks make up 32% of the ETF's holdings. As of the end of the first quarter, the ETF's annualized returns have averaged 23% since its inception in 2018. Year to date, it has returned 10.7%. By comparison, the S&P 500 Automobiles and Components Index is down by 2% year to date, while the broad S&P 500 has delivered a return of 12.9%. Experts expect that the ongoing semiconductor chip shortage will continue to impact the EV market for up to 6 more months. But the world is still in the early stages of this EV boom. The market is expected to grow rapidly over the next 5 to 6 years to an estimated value of $802 billion by 2027. That would amount to a 400% climb from 2019's level. For investors who are looking for long-term portfolio holdings and who have the patience and stomach to handle the short-term volatility along the way, all 3 of these options could turn out to be the big winners. Thank you for watching the video, guys. Please don't forget to subscribe to my channel and like the video.